the other big event today that you were waiting for. That's the Treasury refunding.
Yes.
It moved the market because it came in lower than expectations. Now, there was economic data as well. Bond yields on the long end went down, and that's where we find ourselves today.
Absolutely.
You got what you wanted?
Yes, in fact, we did. We learned what $2 billion is worth to the market. It's worth 15 basis points lower. $2 billion is the difference between the increase from the Treasury refunding in August. The $114 billion should have been the number if they kept that pace. They slowed the pace down to 112. Just the fact that they're acknowledging, just the fact that
they're doing it on the short end too, 2 and 5 rather than on the long end too.
Well, they're recognizing that on the long end, the TBAC is recognizing that the long end, the demand is beginning to wane. And that's comforting to the market. That's all we needed. It's inconsistent with Treasury Secretary Yellen's remarks last week, but I like the actions, not the words.
All right. So, Bryn, it's good to have you in the house, by the way. All right. So, as we said, first trading day of what is historically the best month of the year for stocks. Now, it's not so much what the Fed does today. I think we all can agree on that. It's what Powell says. How do you think we're set up here for the next, let's just call it 2 months?
Yep.
I think people are content with knowing what's in store for the next 2 months, or at least having an idea.
I think the mutual fund selling is over. That's very important. That October 31st, that selling has ended. Seasonality is a real thing. And actually, if you go back to 1985, the median return in November for the NASDAQ has been 3.85%. So you're definitely setting up between the mutual fund selling done, seasonality kicking in, and we'll see what happens with Apple, which we'll get to later. But I think today with the Fed, I think Powell, as the market's saying, is not going to raise rates. But ultimately, where I think there's a ceiling on stocks longer term is that the Fed and fiscal policy are at a counter trend. They're fighting each other. And the massive amount of fiscal stimulus we've had over the last 3 years is still working its way through the economy. And I don't understand how the Fed can say we want to slow growth while you still have billions and billions of dollars being spent locally with different programs inside of the American Recovery Act. And so I think that means higher inflation, higher yields, which ultimately puts a lid on stocks. But seasonality is real, and so I think if I were to trade, I would be going long NASDAQ for November.
Okay. Let's turn to Dracula and the Grinch. The Grinch first, because I hear from Dracula a lot. I mean, you have been negative stocks for a long time, right? I mean, the balance of the entire year. Have you come around at all to a more positive view, or no?
No, the bite of the Fed tightening, the lag effect is only going to increase. And we're going to see further slowdown in economic activity, leading to lower earnings and more disappointments and pressure on the stock market. Stocks probably seen their high for the year. And the real focus right now for our clients is going to be in the bond market. And that's where the action is. And as you know, Joe mentioned with the refunding, it was positive. But the fact is that the federal government's running a $1.5 trillion deficit, and the bond issuance is going to accelerate and put pressure on yields. However, where they are now is a very, very acceptable level for investing.
So what happens, Weiss, if later today Powell acknowledges what's happened in the bond market to a significant enough point that he leads everybody to believe that they are done, that they don't have to do any more because the bond yield backup has already done a lot of the work and the heavy lift for the Fed. And yet he's confident about the economy enough that he leads us to believe that soft landing's still a possibility, that he thinks inflation is going to continue to moderate. How does the market take those comments today?
Well, I think given what the sell-off in the market we've seen in NASDAQ over the last 3 months, that the market's looking for any reason to rally.